A lot of people's dream is to buy a house, to grow their family, their children in there, and to be sure that they will always have a roof under which they can sleep, a place they can call home. However, it's been 2 years that the banks are raising the mortgage rates, and this makes it difficult for everyone to buy a house. And everyone is blaming the banks for that. But is this the truth? Well, in this video, I want to see with you the real reason why this is happening. And in the end, I will also share with you a free tool that I developed to help you understand if you should buy a house or not. Hi all and welcome to my channel. I'm Nico and I'm an investor since more than 10 years. And on this channel I share my experience and my knowledge to help anyone improve his finances. And this is a topic that touches a lot of people because it is one of the most important objectives that a person might have. And right now buying a house is extremely difficult. I mean, the mortgage rates are at more than 7.5%, which is absolutely crazy. I mean, anyone would struggle with such an interest rate. And so there are many questions around that. What is happening? Will the mortgage rate go down? Should I buy or not a house now? Well, let's firstly start to understand why the banks are raising so much the mortgage rates. Because it's becoming more and more expensive to buy a house. And everyone clearly blames the banks for doing that because they're the ones increasing the mortgage rate. But now the important question. Why are the banks doing that? Well, most of the people think that it is because they want to make more money. But actually this is not the truth at all. And it is much more complicated than that. Because what it is really interesting is that with that banks are actually trying to save the economy of the world. They're trying to avoid a financial crisis. And so let's see that. All of this actually starts with the inflation going up, which means that the prices of everything are going up. That I think everyone has seen in their daily life. I mean, all the oil, the food, the flights have increased price. I mean, I'm a person that normally travel a lot by plane, and this year is just crazy how expensive it is. But so why are the prices going up? Is it because the companies want to make more money? No, there are actually 3 reasons. Firstly, it is COVID-19, which is the main contributor. Because yes, even after 3 years it started, it's still highly impacting the world. Because what happened with COVID-19? So at the start of the pandemic, everyone was at home. And so people being at home started spending less money, which means that their savings went up. But then COVID started to diminish and people started to going out again and to spend money again. But now they had more money than before. And so they started to spend more. And this means that the demand increased. However, at the same time, the supply couldn't follow anymore this demand because during COVID, a lot of factories closed because there was no demand anymore. Others adapted their production to the lower demand, as well as all the COVID health issues reduced the productivity of every company in the world. And this means that the production costs were higher, the shipping costs were higher, and also that there were less products for the clients, which means also that the price of things went up because it was more difficult to have it and people were more willing to pay more for the same product. And so all of this led to this increase in prices. And to all of that we have to add the great idea of Russia to put some fuel on fire and to attack Ukraine, which caused the price of food and fuel to increase even more, which brought to a peak of inflation at 9% in July 2022, which is the highest level since the 1980s. And the third factor is that during COVID, in 2020, there's been a peak in unemployment rate, clearly because of all the factories that closed and that reduced the production. But after COVID, the companies restarted to hire people to increase their productivity, to compensate the lack of supply we were discussing before. And this brought to an unemployment rate level which is extremely low. And when this happens, what do companies do to find employees? They raise salaries, because like these people will be more likely to work for this company. But this also means that the production costs are higher, which drives an increase in price of the products, and so it drives again to an increase of prices, which is the inflation. And to that also you have to add the fact that higher salaries mean that people can spend more, and this clearly helps inflation. And so all this macroeconomic context is bringing the prices of everything up, which is clearly bad. And that's the typical situation where central banks have to act, because they have to protect the population and the economy from a huge crisis that could come from that. And there's one thing that banks, the central banks, can do in order to reduce the inflation and to eliminate the risk of crisis, which is to raise the interest rates, which is the interest of the money they lend to governments, other banks, businesses, etc. And what this mean? Firstly, that people can earn more from their savings. Secondly, borrowing money is more expensive. And because of that, mortgage rates have to go up because of the interest rates. And this is actually one of the main objectives of the central banks when they are raising the interest rates. Because houses are one of the most expensive things people can buy, and the objective of increasing the interest rates is to discourage people from spending because they would earn more with savings. And so the main objective of banks is to have people spend less. Because if people start spending less, the prices will go down because there is less demand, which means that the inflation is going down. And if the inflation goes down, also the interest rates will start going down, as well as the mortgage rates. And finally, the result is that the crisis is avoided. And so what is actually happening is that the central banks are protecting us from having a financial crisis of the dimension of 2008. And they do that trying to make us spend less money, actually also give us more money for the money we don't use for our savings, and they are not trying to earn more money from us. And so this is completely the opposite of the general perception. And also, so all of this is temporary, because the objective of the central banks is to reduce the inflation so that the prices for everything we buy every day will be lower. And since we are still not in the objective, this politic of interest rates will continue, because now we are at 3.2% versus 2% of the objective. And also we can see that the employment rate is at a peak, which means that probably for another couple of years the mortgage rates will stay very high. And this means that buying a house now with a mortgage, it's not a good financial idea. That's why you should probably wait. However, anyone's situation is different. And if you'd like to better evaluate whether buy a house or not, to help you, I developed a free tool that helps you taking a better financial decision. You can find the link in the description, but I would advise you to firstly watch this video where you can see the tool in action. Thank you for watching and see you soon.